Hi, and welcome to the Price Action Analyst YouTube channel. I just want to do a market roundup, just a review of the recent price action in the SPY or SPSX, and also just go over some of the news that's floating out there in the market and just what that might mean for where the price is headed. This is probably going to be a rather lengthy, try and keep it to, I don't know, half an hour or such. But I'm just going to take a look at the market here, and I know I did a video previously on the SPY after this drop here, and I did a review of how this price action with this previous high looks similar to 2007-08 financial crisis, the start of that. You can see price kind of washed this previous high here, and then it's rolled over, and you had some strength off the back of the low. But interestingly, what's happened since then is that price has come into this gap. I would expect weakness off the retest of the gap. So it hasn't quite got there, and it's consolidated, and it's starting to roll over here. And it's also, you had a false break of this trend line. Prices come back inside pretty shallow and rolled again outside of this trend line. So, and even here you could argue it came out and retested here, and it's rolling over. So that's bearish action to me. So that the previous video I did where we were up to here, and I said be careful here, because this looks like 07-08, and this is kind of the last area where I identified this previous high and maybe this area here as the last area where price is gonna like roll over. So you're seeing that's what the rollover looks like in the beginning. Not to say that it can't wash here and push back up. That's possible, but it's this price action here makes me more bearish, not more. It reinforces what I expected to happen here. So where do I think it's heading? Depends what happens at this low. So this bar ending on its close is bearish. So if you get another bar that ends on its close here, I would say we're at least going to come and test this gap, and we're probably going to test this wick here. That would be my short-term target. And then it depends on how it gets there, and it depends what price action looks like when it gets there, as to what my opinion will be as to what's going to happen after that. So, but this looks bearish to me. This looks like price is coming down here, and it shouldn't really be a surprise, because all this COVID stuff is ramping up again. And just on the counter side to that, this is the VIX, the volatility, the index, and I'm not sure why. I mean, where price goes up or price goes down, that's increased variance, which should mean the VIX should increase. But I was reading something that says the VIX, the volatility by the whatever measure is behind this, tends to go up when the market's going down. So here's the COVID stuff, and I'm actually long the VIX. So on this breakout, this is the consolidation, and I'm expecting a pop up here, and it's kind of looking like that's going to happen. But that also means it's indicative that the market's going to move downward as well if this is going to pop up. So on the chart, there's a couple of indicators that, in terms of the price action of the index and the volatility index, that look to me like we're going to see some weakness here. So I'm long the VIX, I'm long gold. Gold's going up. that also is indicative that we're going to see some market weakness, because these things are loosely uncorrelated or negatively correlated. What else? VIX gold. I'm actually long Costco, but that's not looking so good. I got long here, price popped out. It's pushing against me, so we'll have to see what that looks like next week. These pink lines are areas where I would expect strength, so I don't know. I'm not going to let it. If it pushes through here, I'm probably going to get out. So that's just the price action stuff that lends me to think that we're going to see some weakness. And then I thought I might start every Sunday just doing a review of some of the news. I just want to get a feel for what, the talking heads are saying. This is a Dow Jones News article by Steve Goldstein at MarketWatch, saying the U.S. economy might not fully return to normal until 2022, and the stock market is at risk of a correction late in the summer. And they're saying the best case for the U.S. economy is that it returns to pre-COVID levels by the end of next year, but it could take until the first half of 2022. So, yeah. Basically, what they're saying is that this market's heading down, and it's not looking. There's not going to be any upturn anytime soon. And again, a lot of the articles are pointing to the fact that the economy was in bad shape. Like, it wasn't the COVID that caused this thing. That stuff was already bad, and COVID was kind of the thing that pricked the bubble. So, this guy's saying many companies had stressed balance sheets even before the pandemic struck, and the risk is these zombie companies will end up cutting jobs, causing a rise in unemployment, which we've already seen. Another factor is uncertainty over geopolitical tensions, including between the U.S. and China, but also between the U.S. and Europe, and between China and India. Plus, there are also downside risks, including a second wave of coronavirus infections, U.S. election uncertainty, plus questions about Europe's planned recovery fund. So, the coronavirus, I'm not sure where you live, but where I am, the coronavirus stuff is ramping up again. So, we went from a shutdown to people starting to go back to work, and then all of a sudden there was a spike in cold and flu cases, and now you have to wear a mask to go everywhere. So, I'm hesitant to go back to the gym because I think that they're going to close it again. Yeah, it's just, and I don't want to get too much into the COVID stuff, but I think it's a scam. I was talking to my wife, and I said, if there was a disease going around, and let's say, for example, it caused your hand to fall off, you'd see a lot of Instagram videos with people saying, look, my hand's falling off, like it's happening, and, this is bad or whatever. But I haven't seen anyone on social media that's sick with COVID. I think when the COVID thing started, I saw one video of some woman in a hospital, and they tried to push it around, but I haven't seen another one since then. And so, that seems incredibly odd to me. And I'm addicted to my phone. I'm on social media all the time, and I have not seen another person filming it saying, hey, I'm sick with this stuff. This is what it looks like. It seems very weird to me. So getting back to the economy, this is an article from Lance Roberts at Seeking Alpha, just taking note that excessive monetary policy inflating a bubble in a variety of assets from debt to real estate to stocks, And I want to talk about that because last time I saw them talking about what the Fed was doing, they were injecting 6 trillion. That number is now up to 10. I'm not saying that they've necessarily done that yet, but by the end of the year or something, it's supposed to be up to 10 trillion. Like, this is, when I did economics, my professors would always say, be careful when people say this time it's different. And in terms of what the federal bank is doing, this is unprecedented. Like, it's crazy. No one ever, the Fed was never supposed to do this stuff either. And I'll get to articles where, they're buying corporate debt and stuff like that. Like, it's just, the world is literally going nuts. The Fed's quick response and massive monetary intervention ceased the asset bubble's deflation and reinflated it. I mean, that's, they're talking about that's a positive. It's all fake. This whole market going up, to the extent that the market's gone up, it's all been like printed money thrown at it. So, I don't see how that's a positive. This article is just talking about how things were bad prior to the thing. This chart's interesting. This is corporate debt to GDP ratios. So they've got the 87 crash, the Asian contagion, and the financial crisis. And the peak of that was the financial crisis. That's about 45% debt to GDP ratios. So we're approaching 50. So, these are new highs. This article here is just noteworthy because COVID-19 infections are not declining as was widely hoped entering the summer months. And so the resurgence in infections is shifting mobility and business trends in the wrong direction. Yeah. And you're seeing that in, if you look at the airline, that's American Airlines. And you can look at these two ways. This is why I've been fond of price action analysis for a long time because, this is American Airlines, and so they were getting over the COVID stuff, right? So people were buying the stock, and now COVID is resurging, and so the stock's going down. But this is where this is a wash of this pivot here is exactly where you would get short. Like if this was futures trading, I'd be hitting the short button right there, and you can see price rolled over. Right where I would expect it to every time. So what are the chances that, they started getting bad COVID news right there? I don't know, but I see that all the time. That's a high probability. That short is high probability for me every time. This is support. This is inside resistance. You get a wash of that pivot, you hit the short. So likewise, I would be looking for buying strength on the retest of this trend line. This retest is going to be around the low. It's going to be through the bottom Bollinger Band. And there's air right there. So, you've got a confluence of factors that I'll be trading right there. If price gets down there and I get substantial buying support, I'll take a long trade there, especially if it washes this pivot. Now, that uptrend's going to have to be justified somehow, and I don't know, there's probably going to be some sort of positive news there. So, I don't know. That's why I just, I've subscribed to chart analysis because I see this as and I could be wrong, but I see this as the lead. I'm not waiting for the news here. I'm just hitting that short because it's washed that pivot at inside resistance. Anyways. Here's another article from Seeking Alpha. So this is here. The Fed's balance sheet will go from 4 trillion at the start of the crisis to 10 trillion by the year end and beyond. That's, that's lunacy to me. And again, I've done economics for a long time. I've worked as an economist. Macro is not my specialty. It was more of a micro guy and econometrics and stuff like that. But 10 trillion in printed money. The federal PAL, the Federal Reserve Chairman, was on 60 Minutes a couple of months ago saying, yeah, and it's just a digital number that we credit in the Treasury's account. Like, this is just lunacy. So I guess they're saying in the next sentence that government strategy is being driven by modern monetary theory. Simply stated, MMT is a macroeconomic framework that sovereign countries like the US, UK, Japan, or Canada are not operationally constrained by revenues when it comes to federal government spending. Like, bullshit. America gets away with the printing to the extent it does because it's a global reserve currency, but that doesn't mean that that's going to go on forever. You can't just keep debasing a currency indefinitely. I don't think. So it says the next trend that is emerging will favor things or hard assets. This is what the gold markets are telegraphing now. This trend will be inflationary, driven by resource shortages and a tsunami of money printing. Yeah, but this is why articles like this piss me off, because if you're gonna be honest with yourself, yeah, that's you've got massive money printing and people are going to go into hard assets. And when enough people do it, when enough people go into hard assets, what does that mean? It means they've figured out that the currency is worthless. And then you've got a hyperinflationary event. And how do you fix that? You're probably going to have a currency reset, So, this is the end of money from paper to things. Yeah, but what does that mean? Like, this one is about the airlines. American Airlines Group led the loser side amid concerns that a second wave of coronaviruses will put the brakes on air travel. So again, this is dated June 27th. Look at the chart. There's the 20, that's the 26. Do I want to be short there or do I want to be short there? This guy's talking about sell signals to look for next week. Richard Henry Sutmeyer from Intelligent Investing. So this guy's talking about charts. He says, last week I presented reasons why the stock market rally from the March 23 lows was ending. This included, in quotes, island reversals on the daily charts from the Dow Jones Industrial Average and the S&P 500. These are sell signals. I don't know what island reversals are, but there's no graph there to show you. Saying a weekly close below 3001.4 this week will result in a sell signal. Yeah, okay. So, I mean, this closed at 3009. I mean, what he's basically saying there is if the market opens down from Friday's low, that's a sell signal. I would argue that just the fact that that closed on its low is a sell signal. So, yeah. And so, if you're getting short there, he's expecting price. So, there's another guy that's expecting substantial downside. He's not expecting it to open at 3001 and go to 2970. You know, those guys are talking about a substantial move, which I would, my first area that I would expect to test is 2864 roughly. Moving on. A lot of bearish articles. This guy is talking about economic data shows a recovery, but the markets do not seem convinced. Investors should consider the reasons behind the fragility of the economic recovery. Part of the issue is sorting through the pandemic mythology. I try to help with that and also explain why I remain bearish. So, I mean, this guy's, to me, when I see this commentary, this guy's seeing the price action decreasing and trying to justify it with news. I'm not really too concerned about that. I'm just following the price action. COVID cases rising sharply in the U.S. I still to this day, I never in my lifetime have they closed the global economy for a pandemic. And even though to this day, they've never really, I don't watch TV, but I've never seen anyone, I've seen a list of symptoms of this COVID stuff, but no one's ever really said, how bad it is or shown. Like, I haven't seen anyone that's sick on the thing, and then they're talking about most people don't know that they have the symptoms. If this thing is real, it doesn't sound, unless you're you're over 85 or have a pre-existing condition, and sure, it might kill you like a flu might kill you. But overall, it doesn't sound like this is a particularly bad thing that you get sick with. Like, I haven't seen evidence the contrary of that. So why not let everyone get sick over the period of a month or two and then just be done with it? And all right, the hospitals are overrun, but deal with the overrun hospital. Instead, they've closed the entire fucking economy, and now you got to deal with the fact that you just destroyed the place. It just makes no sense to me. Anyways, coronavirus cases in the U.S. reached a record daily high as concerns mount over a potential second wave in a number of states across the U.S. This has been most evident in Florida and Texas, in which the latter, Texas, has halted plans of further reopening and thus raises concerns over the trajectory of the economic recovery, particularly if an escalation prompts statewide lockdowns. And this coronavirus thing's never going away. I've heard people are still getting the swine flu, which is, I don't know how many years old, like 6 or 8 years old. So are we just going to stay shut down forever? It's lunacy. Anyways. And again, just going back to the charts, I mean, what is that? COVID, closing the economy, madness, $6 to $10 trillion of printed money, which I think is only a temporary measure, and you're possibly seeing this is the end of the temporary measure and a rollover. And COVID stuff aside, if I'm trading this price action, I expect price to retrace and roll over. The only thing that's different about this retrace is it's gone 25% further than I normally expect it. So if price rolls over here, you paid $10 trillion for that. Really. So yeah, there's all the headings are generally the same thing for next week. Gold prices, rising gold prices, and rising virus cases. A lot of the same stuff here. I did see an article about the Fed buying corporate debt. Now everyone's got to wear a mask everywhere they go. It's just incredible. So here it is. This is a Reuters article from 28th of June. The U.S. Federal Reserve bought $428 million in bonds of individual companies through mid-June, making investments in familiar household names like Walmart and AT&T, as well as in major oil firms, tobacco giant Philip Morris, and a utility subsidiary of billionaire Warren Buffett's Berkshire Hathaway. So the government's now buying private debt. The transactions disclosed Sunday are the first individual company bond purchases made by the Fed under new programs set up to nurse the economy through the coronavirus pandemic. The Fed also added $5.3 billion in 16 corporate bond exchange traded funds, including a newly added 6th high yield fund. So I like how they start the, $428 million in bonds in individual companies, but if you read down, $5.3 billion in 16 corporate bond ETFs. It's just madness. Crazy. I don't know. I do not know. Anyways, I think I'm probably going to leave it there. So, just going into next week, from the charts, I expect price to move down here, and I think, if these bearish bars start to get bigger, price is coming down. So be careful what you're long in. I'm long the volatility index, so that's fine. I'm long gold, that's fine. I'm long Costco, I'm worried about that. Now, Costco's kind of like Amazon because people now are going to do their grocery shopping at the majors. If you look at the Costco price, it was mixed during the coronavirus, so maybe that will help. I don't know, but if price shows downward strength here, I'm probably going to exit, even though, these are ideal long setups potentially, but I'll have to wait and see if it just looks, if the bearish bars are closing at their lows, I think I'm just going to exit. Because that, if it's going this way, if the market sentiment gets very bearish again, it's going to override this stuff potentially. So I'm going to keep an eye on this every day. Well, I do that every day, but I'll be particularly looking to see what the selling strength is like. And, if there's upward pressure, it has to be greater than the selling pressure, early on. So yeah, I think, with the news headlines the way they are and the commentary the way they are and the charts, just I would be looking for stuff to short potentially, or see what if price pushes through there hard, look to hit the retest short. But again, it depends. It depends on what the price action looks like when it paints in. But that's where we're at now. It's very bearish. Expect price to come down here, at least, I think. Anyways, I'm gonna do some chart request videos now, and if you have any comments, please put them in the comment section. It'd be interesting to get other people's views. Please like the video and subscribe to the channel, and hit me up with any requests, chart requests, crypto or stock. And if you have any questions about options trading, that's that's a space that I'm in and reading about and learning about and trading. So feel free to hit me up with any questions. Thanks a lot for watching this video, and I'll probably do another one of these next Sunday.